Hello traders, my name is Horvat and welcome to a new intraday video in which I will cover some major FX pairs. As you know, I wanted to have a webinar, a live webinar, just decided to make live presentation because it would be much easier to cover the markets, but we again had some technical issues, so please take my apology for that, and that's why I decided to make an intraday video. So actually what I was planning to talk about is the euro dollar. As you know, we are looking for a corrective recovery, and the reason why I think this is a correction is because notice that this rally of 1000 pips and this sideways price action is now already lasting since mid-March, while the previous decline, okay, of 1000 pips, as you can see, was much sharper. Actually, it was taking time for around 2 weeks or so. So obviously bears are much stronger than bulls. That's why I think this is only a temporary pause and that we will see another leg to the downside. And one scenario is that this is a triangle still in progress in fourth wave, or that we will see 1.116 level tested before market will turn down. My primary view, as you know, is this triangle in fourth wave. I was looking for a reversal down. As I said in my past updates, that only a slight break up above 1.1385 is not bullish confirmation unless we see a daily close above this level. Obviously this did not happen. A lot of traders went long after the FOMC on Wednesday, but we haven't seen any real breakout above these highs from mid-May. Okay, so this was a real bullish confirmation level, which was not triggered. Okay, so actually crowd was on the wrong side. That's why I expected reaction in the totally opposite direction, and it was to the downside, as you can see. So what I'm looking now is at ABC decline. Okay, so I think I have 1 hour count here or 15-minute count here. So I'm looking at wave C now, which seems to be in progress. This is a 5-wave pattern, so I'm expecting a little bit more weakness because, as you can see, this decline from 1.1410 is not in 5 waves yet. Okay, so it's actually wave 1, wave 2 pullback, wave 3, wave 4, wave 5, and this was a sub-wave 2, so looks like this strong decline is now wave 3. We could see a bounce or a slow corrective movement in wave 4 in coming hours, but again I will be looking for a decline towards 1.1050. Okay, the reason for this level is also on this 4-hour chart, where I'm looking at 61.8% fee projection. That could be a base for a wave D. Also here was a swing at those same levels, and we got this trend line as well connected from March lows. Okay, so this is very important region that could be tested in this week. So be aware of a bounce up in wave E. As you know, triangle should be made by 5 waves, so don't be surprised if euro bears are not ready to take a full control yet. Okay, now I will look also on Aussie dollar. Actually, I'm tracking 2 wave counts now after we have seen a slight break to a new low towards 7670. So just a second to load my charts here. So actually here is my count that I shared earlier this morning. I said that this is likely, let's move these few levels, that this is likely wave 2 as a sub-wave of a 5-wave decline within a wave 3. So we were looking for much lower levels, but notice that market is now trying to turn to the upside. So if we would expect that to be market to fall down into wave 3 or 3, then this leg should be one of the strongest, but it's not the case yet. So actually this decline can also be counted in different way. Okay, actually notice that there are 5 waves to the downside. Okay, wave 1, 2, 3, 4, 5. So actually this can also be labeled as a leading diagonal. So I will make a new wave count here. So let's assume that here was end of a corrective rally. Okay, so we go to lower time frames, and I will now label this as leading diagonal. So this could be wave 1, 2, 3, 4, and wave 5. We have seen an overlap here, which is loading leading diagonals. So here are now our trend lines, and if there was low of a 5-wave decline, then you would expect now a 3-wave bounce, and a 3-wave bounce could lift Aussie dollar back for 50 or 61.8%. Usually in leading diagonals you will not see a retracement back to the area of a 4th wave, but probably into the area of a wave 2, so which is slightly above 61.8%. So I would not be surprised to see this level tested if we are really now headed higher within a 3-wave rally. Okay, so I would be looking for something like this, with A, wave B, wave C, and then a reversal down from around 61.8. Okay, so after all, I see Aussie dollar clearly in bearish mode. There is no way to count this rally from start of June anything else than a corrective pullback. The only question is if this will go more complex or not. But in either case, I think that sooner or later Aussie dollar will continue to the downside, because we had this 5-wave decline from mid-May, and obviously we are then looking for pair to break towards new low. Okay, so I'm bearish on Aussie dollar and will be looking for more weakness ahead. Now at the same time I will take a look on gold. As you know, gold is strongly correlated to Aussie dollar. Not always, but usually. So on Aussie dollar, for our chart, as you know, I was very bearish on gold, and actually this coming weakness now seems to be confirmed, because we had a 3-wave rally from March, okay, and now again we had a 3-wave rally from June. Okay, so those 3-wave rallies must be identified as a corrective waves. So to me, it tells me that we will see next impulse to the downside in much stronger fashion. And if you take a look on this current reversal from this trend line resistance, you can count 5 waves of decline. Okay, so this tells me that market has turned bearish, that this 3-wave rise is completed around 61.8%, and that we will see much lower levels, but again after a pullback. So this wave B supports around 1174, 75, maybe even 72, could send prices up into a pullback and then cause a strong decline for wave 3 of 3. Okay, so actually if we go to the hourly chart here, you can see that I labeled this 5 waves down, waves 1, 2, 3, 4, 5. So after wave 5 you would expect a 3-wave bounce, and actually this structure, okay, is matching very perfectly with our Aussie dollar. So if Aussie dollar is headed into a 3-wave rally after possibly completed leading diagonal, then gold could also make now a 3 waves up, okay, back to the area of wave 4 or slightly higher, and then a turn to the downside. So if we are really headed higher here, then I would pay attention to those resistance levels from previous swing highs. Okay, so keep an eye on what is this price, 1190 and 1192. Okay, but obviously you will pay attention to wave 4 as well. So this from 1188 towards 1192 is definitely very important and significant intraday resistance level. Okay, so keep an eye on that zone. If we'll see it tested, I will be expecting a new turn to the downside. Okay, maybe even much stronger fashion than current 5 waves of decline. But all in all, even if we see straight move down from here, I see gold traded lower. I'm expecting that price will take these 1162 levels out from start of June. Okay, okay traders, so thank you for your attention, and I will catch you with more updates on our intraday page. Bye.